In the game of loans, you either win or you learn. Welcome to the game of loans, where fortunes are forged and empires are built. Your hosts, lords of lending and wholesaling, are here to guide you through the realm of real estate and wealth building. Brace yourselves, cash flow is coming.
Today, we are talking about 2025 and what does that mean for real estate. So,
He already said we're going to disagree, so let's see if we fucking disagree on this one.
what we won't disagree on is who won.
Right.
But we won't say the name
Right,
on the
right,
podcast today.
Oh, actually, on the podcast we can.
Yeah.
Trump won.
All right. So,
Fuck you, Harris.
Trump won, and the Senate and the House, red. So while we got a filibuster, and we can get policy across, it's still pretty narrow. So I think there's going to be moderate policy that gets pushed across, in the next couple of years before the midterm elections. But specifically, let's talk about how this is going to affect real estate, interest rates, and our world. So over the past 3 months, the Fed's already started to decrease rates. We've had 75 basis points of reductions, and the December meeting is this week, and the market consensus is another quarter point down. So that'll be 1%, in the last 3 months of 2024. That's on short-term borrowing rates. Does not directly impact the 30-year rate. The 30-year rate follows the 10-year Treasury, and the 10-year Treasury actually spiked a little bit, for a number of reasons. The bond market, saw an increase in bond yields because there is some fear over tariffs and what that's going to do to added costs, nearshoring investments here in the U.S., and just general kind of short midterm outlook on interest rates and where interest rates will stabilize over time.
But I want to talk to you about that. There's a lot of talk where a lot of people say that when the Fed's lower rate, it's on short-term lending, right? On the short-term rates, right? However, I like to say this, very rare occasions where the Feds are fucking decreasing rates and the 10-year ends up going up and the regular rates end up going up.
Yeah, no, so, I agree with you there, but I'm looking at it on the short term. So if rates come down on the short term 2%, you can't expect 30-year rates to come down at 2% unless the long-term outlook materially changes. So while they correlate down, the speed at which the short-term rates go down and the speed at which the 30-year rates do, it lags.
Right.
So when we're talking about outlook for 2025 and 30-year rates, there's people out there predicting 4 or 5% rates by the end of the year. I think that rates are going to stay higher longer, but are still going to come down. And if we're at an average of 7% today, I think by the end of the year, it's reasonable to expect that 30-year mortgage rates will probably be closer to 6.25. But the short-term Fed rate will likely come down another 1 to 1.5% from where they're at, meaning from a 5.25 Fed rate to 2.75, like right around 3% is kind of where I'm projecting that they're going to keep the longer term Fed rate. And the reason why is because if they decrease rates too quickly, it's going to cause an increase in spending, and that cost savings will likely cause inflation. To flatline and potentially go up. And the Fed's goal here is to get inflation down to 2% and keep it at around 2%, which is historically, the average of inflation for the consumer price index. But the 30-year rates, even though the Fed rate may stabilize at the end of 2025, the 30-year rates will continue to go down while the Fed rate stays flat because it's catching up to that lag there.
Right.
So rates will come down. I think 4.5%, 5% for a 30-year mortgage is where they're going to bottom out. But I think it's going to take 2 to 3 years to get there.
And so this is where we're going to disagree. I think that if he doesn't force the Fed chairman out, I think that the Fed chairman is going to fuck with him. And I don't think, there's going to be much movement in the short term rate. That's my opinion. Because he's not going to want to help him out. And he's not going to want the economy to fucking catch on fire.
Well, here's the thing: is like the Fed's got two main jobs. It's watching unemployment and watching inflation.
Yes.
And unemployment's going up, and if it continues to trend up at this rate, then we're going to go into a recession, and we're going to have other issues with the financial market. So he could try to play hardball with Trump.
I think he is.
But if there's a lot of underlying unemployment that's not reflected in the numbers today, there's major layoffs still happening at large corporations.
But what does he give a fuck? At the end of the day, Trump has attacked him, right? Because that's what he does. He's fucking motherfucks people, right? This guy's at the tail end of his fucking career. It's not like he's going to go get a fucking job at fucking Goldman Sachs or Morgan Stanley. This guy's going to fucking retire.
Yeah.
And you want to know something? I think he's going to stick it in fucking Trump's ass. I think he wants fucking... he doesn't want... he does not want Trump to have a booming economy while he's Fed chairman. That's my opinion.
Yeah, well, I don't think that Trump necessarily needs rates to be low to have a booming economy. There's a lot of stuff that he can do with tax policy, and
I agree.
And moving employment onshore into the private sector that will stimulate the economy. But I do agree that Trump wants 2% rates, and he wants everybody's house.
I don't think he wants 2% rates. I think he wants the 4.5% rate before the end of next year.
I meant 2% on the Fed funds.
Yeah, Fed funds, right?
Yeah.
Okay, he does. You're right. He wants the Fed funds rate to be at 2%, right?
Because in order to get to 4.5%, 5% in the next 12 to 18 months, it needs to come down like another 200 basis points on the short term.
Yes, correct. So he wants the long-term rates to be around 4.5%, 5%. Yeah. Why? Because then he's going to stimulate the fuck out of the fucking real estate market, right?
Yeah. Well, it's everything, because if 30-year rates are at that price, you got to think. Take a step back. Where's Trump's wealth at? It's in the stock market and it's in commercial real estate. Yep. Okay, so commercial real estate the rates are typically set up at a margin, which is they're based on the asset and the risk of that, plus an index, which is typically it used to be LIBOR, now it's SOFR, or it's the prime rate. And both of those directly correlate to not direct, but they're pretty damn close to the short-term Fed fund rate. So if he gets the Feds to reduce rates by 2%, that means it's a 2% less cost of capital for commercial real estate, meaning values will jump up even more than they'll affect 30-year mortgages. And so if I'm Trump, I'm pushing more for reduction in short-term rates, which will allow all of these commercial properties that are out of the money, meaning they don't debt service, they don't generate enough income to cover the payments. There's a lot of pent-up default risk with these banks that finance commercial, and they're modifying and working out these commercial loans because they don't want to force a sale and crash the real estate market. So that'll create and spur a lot of commercial real estate refinancing, but it'll also improve the value of commercial real estate, specifically multifamily.
And residential.
And residential.
As a buy factor, right?
Yep.
Right? So I agree, but I don't think that this fucking Fed chairman is going to play ball with him. I don't, and I don't think he's going to be able to get rid of him.
Well, he's not going to have a choice if unemployment continues to trend up at this rate. If inflation stabilizes and unemployment continues to go up, and the country's heading into a recession because of unemployment, then he's going to be forced to do it. And it's not just him that gets to make the decisions; it's a committee of all the Fed chairs.
I agree.
And not everybody hates Trump as much as Powell hates him.
So we don't know.
But
we don't know that.
I think it's highly probable.
Powell hates his fucking guts.
I think it's highly probable that we have another 50 to 100 basis points of rate cuts next year on top of the 1% that came down.
Right.
And if that gets us to, that'll get us to like 3.25%, 3% on the Fed fund rate. Beyond that, I think there needs to be some major, changes in the health of the economy, for them to come down further than that. But look, another 100 basis points, 200 in total, that gets hard money rates back down into the single digits. We might be talking 9% hard money instead of 11, 12 today. DSCR, 30-year loans. I think we get in the sixes. Mid sevens. And we were there, close to there for a little bit, but I think mid sixes, to high sixes is in line. And on a 30-year, 6.25 by the end of the year.
Yeah.
But in order to spur housing to really grow, they're going to need to get into the high fours, low fives, because you still have a lot of people that didn't buy a house after the pandemic
Right.
that are in 3.5 to 6% mortgages. And some people who bought in 2022 and later that are in 6, 7, 8% mortgages that will create more affordability as those rates come down. But you have a unique circumstance in that so many people refinanced and acquired properties late 2020 and throughout 2021 when rates were 2, 3%. They are locked in for life. They aren't ever going to sell or want to sell because, you know, they're not going to be able to find affordability. So unless they need cash out or they're upgrading or downgrading on that house, they're not going to move. Yeah. But we might have frozen 20% of the housing inventory in the country.
I think for now.
Because you know, you're so far out of the money or it's so much costlier with the higher interest rates. Listen, you don't want to refi.
If I'm at the fucking 3% rate, which is phenomenal.
Yeah.
And they're never going to see fucking 3% ever again.
Yeah.
Let's just be honest. Not at least in our lifetime. I don't see it happening, right? Unless something fucking crazy happens. But if they're at 3%, it's not going to be much of a push to go to 4%, 4.5%.
Yeah.
You know what I'm saying?
Yeah.
Now, if you're fucking 2.5%, you're right. That shit's locked in. Those motherfuckers are never leaving. That's free money.
Yeah, there's people in like 1 and 3/4 rates.
Yeah, they're never going anywhere.
Yeah.
Those homes are going to be locked up and they're going to be rented out until the motherfucker dies or something fucking happens.
So you have Blackstone and Vanguard and these large conglomerates that are buying up all the single family housing inventory because they're building these massive rental portfolios. Mm-hmm. And then you have these people who are in super low interest rates that aren't going to want to sell or refinance because they're in such an affordable payment that have locked up that inventory. So I think that like that's going to limit the amount of available inventory. You'll still see prices go up because there's a lack of inventory. As these people go up. So I think
there's an $8 million home shortage.
So I think appreciation will still be there.
Right.
The number of transactions will be less than we would like them to be because a lot of people are locked up or they're forced to rent because they're priced out of the market or, you know, these large conglomerates are owning all the properties. Now, the one thing that I think could happen is if Blackstone and BlackRock and Vanguard and these large companies are forced to sell or decide to dump their rental properties on the market.
I don't think they're going to dump them. I do think that there's going to be regulation that's going to be passed.
Yeah, I mean, RFK said that he before he joined Trump's administration, he was talking about adding a special taxation on these large corporations that own rental properties.
These guys don't fucking. These guys
they're
don't
all
pay
in
taxes.
They
don't pay taxes. And unfortunately, as much as we say that these guys like Trump, he's an independent guy, he's not really under the gun. It's bullshit because he's a businessman, right? Musk is a businessman, and these guys on their larger projects, they're in bed with the fucking, Blackstone and BlackRocks and Vanguards.
Yeah.
That's it. And at the end of the day, birds of a feather flock together. Who are fucking Trump's best friends?
Yep.
They're big time real estate guys.
Yeah.
Who are fucking these guys borrowing money from? BlackRock, Blackstone, fucking Vanguard, right? PIMCO, right? And are they really going to go out there and fucking hurt these guys? I don't think so. However, I do think that they're going to have a conversation with these guys because if they don't stop them, they're going to end up owning 50% of affordable housing. Yeah. And that's fucking crazy.
They're on pace to own 60% by 2030.
That's crazy, man.
Yeah.
60%. So just think about the market making that they're doing in the affordable housing. Meaning they're going to dictate fucking, and they have long-term patient money, right? So in any fucking medium income, low income area, they're going to make the market on the rents.
Yep.
Right? Because that means out of every motherfucking block, these guys are going to own 6 out of 10 homes.
Yeah. That's why,
that's crazy.
That's why we continue to tell people, like, don't be stupid. If you can afford to buy something, just buy something today. Yeah. Even if it's not exactly what you want. Yeah. Get in before you're left out because you're going to get frozen out eventually. Because
what's the content? What's the content that they're putting against me and you is don't be stupid. Don't buy a fucking primary house.
House is going to crash. It's going to crash.
Oh, and rent. Renting is a lot easier or better. You're younger than me, but did you ever hear that shit when you were growing up? No. Don't buy a fucking house.
I only heard it from people who didn't own property. Right. They were just uneducated or scared. They they went through the '08 crisis and got foreclosed on,
right.
Major market things that affected them and caused them to lose money, lose their house, get foreclosed on. That's PTSD, and that's just people who are scared and don't understand the current market.
You've been listening to The Game of Loans, where real estate battles are fought and won. Make sure to fortify your defenses by subscribing. Cash flow is coming, and we'll be back next time to help you claim your throne. The war of wealth continues.